Ladies and gentlemen, good day and welcome to Vardhaman Textiles Limited earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Archit Joshi from Batlivala and Karani Securities India Private Limited. Thank you, and over to you, Mr. Joshi.
Thank you, and good evening. Welcome to Vardhaman Textiles Limited's 2Q FY2024 earnings conference call. We thank the management for the opportunity to host this call. We have with us today Mr. Neeraj Jain, Joint Managing Director, Mr. Sushil Jam, Director of Raw Materials, Mr. Rajiv Thapar, Chief Financial Officer, Mr. Mukesh Bansal, Head of Fabric Marketing, and Mr. Varun Malhotra, Head of Finance. Without further ado, I'd like to hand over the call to Mr. Neeraj Jain, Joint Managing Director of the company, for his opening remarks. Over to you, sir. Thank you.
Yeah. Good afternoon, everyone. Thank you for joining this call. So, the declared results, I'm sure you have gone through the same. The results are almost in line with the first quarter, maybe a little lower than the first quarter, but in any case, not really much of improvement in the overall numbers are looking like. In terms of business, this has been, again, continued to be a challenging period for the spinning industry, worldwide, not only for us, but for everyone. And demand for yarn is not improving. Of course, it was much worse if you look at 2 or 3 quarters back. So from there, it is improved in terms of demand, and most of the spinning today is running on a full capacity basis. But at the same time, it is still on an oversupply situation. As a result of that, the margins are not improving at all. So this has been a period where, if you look at the 2 or 3 last calls, we always talked about lots of stocks available with the brands. Brands not ordering, the other orders coming in, and the various segments of the industry not doing good. But I think if you look at the current periods, wherever or whichever brand wanted to de-stock, that's over, and the brands have started coming back for the normal buying. Maybe they are not buying 100% of their requirement, but they are definitely buying 75, 80, 85% of what they think is the requirement going forward. So to that extent, there's an improvement happened. At the same time, still the overall demand is still not on a full basis, which used to be there. The impact of higher interest rates, the impact of higher gas prices because of the Russian-Ukraine, the impact of high EMI because of the higher interest rates, and food inflation, etc., still hurting most of the Europe, most of the USA. And as a result of that, again, as we have been discussing, the discretionary demand where the textile comes in is comparatively low. And as a result of that, since our segments are spinning and weaving, I think there's some negative impact, especially on the spinning side in this period. There are 4 major segments in the textile industry, which is home textiles, knitting, denim, and weaving. If you look at all the 4 segments, home textile in terms of consumption is doing reasonably well for the last couple of months, and they are practically running the full capacity for the last 6 months or so. So which means their demand has started improving, and this is one segment. Of course, the prices of yarn are not increasing, or the price of home textile may also be under pressure, but at the same time, at least their utilization for the Indian mills are surely better. The second segment where we started looking at some improvement was the weaving woven fabric. Most of the companies which started the work from home kind of a concept in the COVID period, most of the companies started looking at partial, compulsory coming to the office partially, if not fully. As a result of that, the demand for formal fabric improved. And because when the COVID happened, woven fabric was the worst hit at that stage. And now once the people have started going back to the offices, they have started looking at the formal clothing. The woven is definitely improved. And for us also, I think these are the 1 or 2 months where our utilization is definitely one of the best. And I'll explain it a little later once again. segment is the denim, which is one of the biggest segment, but it's not doing good. And the fourth is the knitting. So both denim and knitting, which is considered as more of a informal or a casual kind of clothing, these are not doing well because as people are moving back to the offices, the demand for these products are less as of now. And as a result of that, there is a pressure on these segments. And since these are the large segments, this is putting a pressure further on the spinning side. On the spinning side, India normally used to do close to about 110, 115 million kg of exports per month, which came down to as low as 30-35 million kg some 7-8 months back. But as of now, we are back to the normal, and our overall export from India is in the range of about 110-115 million kg per month, which means in terms of volume at least, we have started matching what we used to do earlier. The second part is the local consumption. I think definitely there is a pressure because of direct and indirect both. So the local consumption means the knitter, denim manufacturers, or the woven, the garmenters who are buying yarn in India, and they are exporting the products to the outside world. I think there's one reduction over there. To the Indian reduction, Indian consumption also looks like a little lower on a lower side. As a result of that, I think in spite of normal exports of yarn, the overall yarn is very, very depressed as of now. On the woven side, these have definitely improved, as I mentioned. And for Vardhaman also, we are in a position to utilize almost full capacity for the last 1 month, 2 months. And we hope that this trend is continued as of now, going by whatever orders we have or whatever predictions we have or whatever visibility we have. The things are looking positive. And I think that's one of the advantage Vardhaman's number has as of now, that this business is doing better, both in terms of volume as well as on the profitability as well. On the cotton side, this has been again a very, very different period. We have seen the last year cotton behavior. So in Indian scenario, from the original crop size of estimation of about 330 lakh bales, since the crop arrival was very, very less, or in the initial period, it was estimated maybe the crop will be very, very less. And at one stage, the CAI kept reducing their crop estimates, and they came back to as low as maybe 295 lakh bales or so, 295 lakh bales as a total crop size. But eventually, I think it was, rather than the less quantum, I think it was more of a hoarding or more of a the lesser receipt which was there in the market, which was done by the farmers. But I think by the end, by the time we ended the season on 30th of September, the total crop size was almost 320 lakh bales, which was not very bad compared to the initial estimation of 330 lakh bales. And I think that gave some advantage to there's some reduction in the prices towards the end of the season, but otherwise it was estimated most part of the season, since the crop will be very, very less, the Indians may not have availability of cotton because the import couldn't be done because of the import duties. And as a result of that, everyone in the system was going long, whether it was farmer, whether it was ginner or a trade. But eventually, as the crop kept coming, slowly the prices got adjusted and the enough availability of cotton was there almost for the full year. The new season is started. Again, the industry estimate is still close to about 320 lakh bales, but I think the first official crop estimate which has come in from CAI, they have given a crop estimation of 295 lakh bales. Once again, they feel because there is attack of pink bollworm in some of the areas where it is felt that maybe the crop size could be lower. So again, showing a concern. So they have shown a crop size of 295, consumption of 311. So which means there is a reduction of almost 16 lakh bales. And if you look at the closing stock 30th September, it was estimated to close to about 40 lakh bales. And in case we reduce another 16 lakhs out of that, by the end of next September, the overall closing stock is estimated only 22-23 lakh bales. In case that happens, that is going to be very, very difficult for India to manage the entire system, because we have so much of spinning, then there are ginning, there are different stakeholders and anyone and everyone will have some stock of cotton, and managing the entire country with 22 lakh bales is definitely could be a concern. But as far as the industry estimations are concerned, they are still feeling the crop size may not be less than 316 to maybe 320 lakh bales even as of now also. So on one hand, we have an issue where if the availability becomes a question mark. Two, the New York future in this period has been coming down. As per the latest estimation of consumption, now the consumption has been reduced from 24.9 million or 25 million tons to close to about, one of the agencies rated it as 23.9 million tons also. So there is likely to be some increase in the overall stocks. So which means the worldwide there seems to be enough cotton available. The prices are under pressure. So most of the time New York future has been in this period in the range of about 87, 88 cents, or 85 to 87 cents, which has come down to 80 cents as of now. So the Indian prices today are close to about 56,500 to 57,000 rupees a candy. If you convert it into the US cents, it is close to 86, 87 cents. Till the time we have a international cotton or a New York future at in the range of about 80 to 83 cents, so which means our cotton will be 300 to 400 basis points over and above the New York future, which has been the normal trend if we leave the last year. But the worry could be in case New York future keeps coming down and comes down to, let's say, 79, 75 cents, 76 cents. In that scenario, we will not be in a position to, our Indian cotton will not go below this, because 56,500 or 57,000 practically becomes the MSP prices, where the CCI will start operating and they'll start buying the cotton. And in case they corner some of the cotton, the prices will not come down. So we have a situation where the New York future, if it remains here, I think it's not really big of a concern for the Indian spinning. But in case New York future goes down further to 75 cents or so, in that scenario, our cotton at 86, 87 cents will be almost 1,000 to 1,200 on, which will be a little expensive because the Vietnamese are in a position to get the contamination-free cotton in the range of about 900 to 1,200 basis points. And in case we get the Indian cotton at 1,000 points, I think it's definitely a disadvantage for the Indian industry. So this is yet another challenge that how the New York future will be placed going forward, and to that extent how the Indian prices will behave. So third is in terms of the quality. As of now, though, there's a pink ball form, but at the same time there doesn't seem to be any big disadvantage in terms of quality till now. But we'll have to keep watching because it is only the starting of the season as of now. Only about 100,000 bales per day have started coming in. The overall crop size which has come into the system from 1st of October is only about 25 lakh bales or so as of now. So we'll have to wait and watch for another 2 months, so that by the time we take a call that how the overall crop quality arrivals happen. So the next 1.5 to 2 months are quite challenging for the spinning industry, and we'll have to look at how the things evolve so that we are in a position to make up our mind in terms of our stocking policy as well as how the prices will be ranging in this between. So these are a couple of issues and challenges where the industry is struggling with as of now. And I think that struggle, though, in terms of the business cycle, in terms of the China plus thought process, I think things are quite favorable for India as of now. And most of the brands, whosoever was committing, I think they are looking at India as definitely one of their possible supplier of goods. So those are some positives also, but at the same time, because of the oversupply situation of spinning as of now, the things are under pressure for sure. And we'll have to wait for some more time till the time the normal demand happens. But in the meantime, as I mentioned, since the woven for the company is doing better, so our results are better. I'll request Mukesh to give some more brief to the investors on the woven marketing fabric side so that then we can start with the QA. Over to you, Mukesh.
Thank you, Neeraj ji. Good afternoon, everyone. As far as the fabric business is concerned, as we mentioned during the last quarter call also, the international brands had 3 major concerns while placing the orders. One concern was the current inflation. because of the inflation, there was lesser disposable income with the consumers. Number two was the fear of economy going into the recession. And third concern was their carried over inventory in hand with the retailers. So we are also seeing the results of some of our retailers who publish their results internationally. Now the first two concerns still remain, which is the inflation and the fear of recession. But the third concern, which was the inventory in hand, that concern has more or less, the inventories have come back to the near normal level. Barring few brands, in some brands the inventory could be abnormally low. In some brands it could be high, but by and large in the supply chain, the inventory has come back to the normal level. So which has triggered the demand to a big extent. Particularly, we are seeing the demand from the US market, we are seeing it from the UK, and from the European market also. After a long time, the demand has started building up. And Japan is also one of the bigger markets for us. And from Japan also, since the COVID happened, the market has never revived. Now we are seeing the revival in the Japanese market as well. And next biggest market for us is the India. Indian market, the retail situation at the moment still continues to be little subdued. But there could be the reason because this time the festive and the marriage season was a little late, which is the major time when the people go for shopping the garments. Since this time the Dussehra, the Durga Puja and Diwali were little late, so now that demand has started picking up, and we, along with our customers, we expect that the next 6 to 8 weeks will see a good demand in the Indian retail sector also, which will enable the retailers to put the money back into the materials. So the Indian demand will also likely to pick up. And second, another aspect that Neeraj also mentioned is the China Plus One strategy. Many brands are now focusing. So day by day, the concern of sourcing from China and people fearing that Chinese cotton may find a way in the supply chain, those concerns are increasing. That is why the brands are also putting more emphasis on buying from India, as India doesn't buy any cotton from China. And then the sustainability and traceability practices also come under the focus, and Vardhaman has that natural advantage, we being the 100% vertical integrated. So more than 90% of the yarn that we consume for the fabrics, it comes from within the Vardhaman. And then we have to trace back the cotton, wherein we have very good practices in place. So we are able to give full, traceability to our customers. So we have that natural advantage. And as we mentioned that in second quarter, our capacity utilization was better than Q1, and Q3 is going to be better than Q2. And in any case, H2 for the fabric business, because it is largely spring-summer oriented for international market, we are primarily cotton-based textiles. So H2 is better than H1. So we are likely to continue sequentially better numbers as far as fabric is concerned. That is from my side, Neeraj.
We can start with the QA, and whatever are the queries, we can resolve it or we can reply it as the questions are asked.
Thank you. We will now be beginning the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Rushabh Shah with 03 Securities. Please go ahead.
Yeah, hi, am I audible? Hello.
Yes.
So my first question is, we have spoken of MMF becoming larger portion of the overall pie. How does it alter our competitive dynamics of the country, and what are your thoughts on what can help our company to grow and get bigger share of MMF in the coming future, let's say next 5 to 7 years?
So on the Definitely, if you look at the world consumption, the MMF is much higher than the cotton, so it's almost 70% in favor of man-made, 30% cotton. Whereas the Indian situation is reverse of that. We are 30% cotton, we are 30% MMF, 70% cotton. We are finding even for the Indian brands or outside also, whosoever was buying 100% cotton, I think there's definitely improvement or there's definitely demand for the blended yarns, whether it is mixed with the viscose-based or it is mixed with the polyester-based. So definitely we have geared up ourselves in case the demand for the blends increases. On the spinning side, we don't have any issues, and we have created those capacities. And depending upon because the spindles are almost same, it's only some changes in the preparatory which are required to do the same. So to that extent, as Vardhaman, there is no challenge to us, and we can increase whatever is the blended capacity which comes in, or even 100% synthetic man-made fibers are concerned on the spinning side. On the fabric side also, I think we are definitely improving. We already have a good experience of blended as well as the man-made fiber consumption production. So as far as the blended yarns blended fabric is concerned, not much of a challenge. But on 100% man-made, definitely there are some companies, some technologies which specialize on the man-made side. So since as of now there's not really much of demand, but at the same time going forward, there could be a possibility. So we have started evaluating those equipments where in case we have to look at 100% man-made based fabrics, how do we go on that? So we are studying it, it's under evaluation, and maybe as the demand grows, all studies should be completed, our experiments should be okay. And maybe by the time we find the actual demand start coming in, we'll definitely equip ourselves or add those equipments which can help us in processing the man-made based fabrics more efficiently. We can do it today also on the cotton line. There's absolutely no concern or issue, but I think going forward, if the 100% man-made increases, we can equip ourselves. It's not really a very big time required for the same. So to that extent, we are already started working and evaluating those technologies.
Okay. And my second question is, in the business of spinning and fabric manufacturing, besides utilization of facilities and procurement of cotton, what are the key focus areas for the senior management?
Our first focus was, of course, you mentioned that the first focus was how to utilize the full capacity. At the moment you start utilizing full capacity, your all cost starts coming down. I think the focus, as the more and more brands are coming to India, people are talking of China Plus One. So all these brands which comes in, they require a very different service levels. They will be requiring different kind of fabrics, and they'll be definitely requiring more mix of the man-made based products also. So catering to all those change management, servicing they require, all the kind of social audits they require, all the sustainability information and data they require, because all these brands which comes to India will definitely start looking at better managed companies, because for them to go to the very, very small companies for every product, it won't be possible. So both on the fabric side as well as on the spinning side, we are finding whichever brand wants to come, they want to look at one or two sources only where they can depend more on that. And once they start coming in, their requirement of sustainability, quality, different products, different service lines, it is a different ballgame altogether for every brand. I think as of now, the entire energy is going in. Whenever these customers are coming in, how do we cater to them? How do we understand them? How do we create business model with them? We have to start supplying them the products, because lots of these products are today being imported from China. China is mastery on the man-made based products. They're on the blended based products. And those are the challenges where the organization is looking at. And once these brands are there for a longer period of time, I'm sure this will give us lots of opportunities for growth as well.
Okay, and so my last question is, we say that we are a client-centric company. What does it mean, and how are we different from other companies in the market?
I'm sure today everyone has to be a client or a customer-related organization, customer-centric organization. The only point is where whatever service levels are required, whatever the customer need, customer demand, how fast can we meet them first time right? So many times the customer requirement, I want product in these many number of days, or there are some urgency, there are some different products required, there are sampling required. So there is a cross-learning from one plant to the other. Here, these are the products, and also in terms of our own development and copying the customer's development. I think the amount of focus being given in Vardhaman on the customer-related issues is, I'll not say the others would not be giving, but definitely we feel we definitely give lots of time and energy to that. Second is that whatever is the customer requirement. So there are lots of companies where they have a policy of selling for 1 month only, or maybe on a deal-to-deal basis. We are open. Some customers want a season pricing. Some customers want a deal-to-deal basis. Some customers want a 3-month pricing. Some customers want whatever model they require. We are trying to fit it into our system, whether for yarn or fabric. So the customer, many customers will say, no, I'll not change the product pricing during the season. So you give me a 6 months pricing. Rather, some of my customers ask me even for yarn 9 months pricing. So whatever is their requirement, which is fitting into their business model, we are trying to look at that we should upgrade and we should be in a position to take that risk and give that product to the customer so that we can fit into that. Third is the customer should not suffer maybe because of quality. For example, we know the quality of cotton has been very bad 2 years back. But it was our decision that we will not let the customer suffer on account of quality. So whatever was the cost, we incurred that because we find it may be a loss for a year. But if you lose customer confidence, probably you lose them forever. So as Vardhaman, we have always been looking at the customer should not suffer. They should be in a position to get what they require. And to that extent, whatever internal systems, processes or cost is required, if we are not in a position to even utilize that, we should be in a position to bear that so that the customer continues to remain with Vardhaman.
Okay, sir. Thank you. Thank you so much for your detailed reply.
Thank you. Next question comes from the line of Resham Jain with DSP Asset Managers. Please go ahead.
Hi, sir. Good evening. Thanks for giving a clear update on the sector. So I have a couple of questions. The first one is just with respect to, let's say, upcoming quarters. First half has been single-digit margins overall, and I presume yarn would have been significantly lower while fabric would be double-digit. But how do you see, based on your current order book and the current cotton in hand, margins to behave, let's say, in near term?
So at least for the current quarter, going by the today's situation, I don't think there's likely to be any major change from what we have seen in the first 2 quarters. And most of the yarn orders today are not beyond 1.5 months or 2 months. So I think depending upon how the prices go, how the cotton goes, we'll have to wait for the 4th quarter numbers. But going by the current situation, the 3rd quarter is likely to be aligned or in line with the 2nd quarter.
Okay. And in terms of margin, how are the margins different between yarn and fabric right now?
So what you mentioned that the yarn will be significantly lower in a single digit and fabric will be mid double digits, that's where we are. Okay.
And in terms of the situation, you mentioned about the inventory situation at the retailer level, but generally yarn also mills used to keep 2 to 3 months of inventory earlier, pre-COVID and all. Are you seeing that situation coming back, or because most of the mills are now keeping yarn for a very less period? So is this the new normal?
No, the yarn stock with the mills, even pre-COVID, the norm has always been less than 1 month. So in between, the yarn stock increased because the spinners were not in a position to sell. But otherwise, the norm has always been less than 1 month, and even that continues. So if mills are not in a position to sell, they may increase it temporarily. But effectively, at the end of the day, they are always looking at inventory to be managed within 1 month maximum.
Okay. And sir, generally you have been quite confident about scenario improving over medium to long term. And obviously some of our investments we have deferred given the uncertainty in the situation right now. But and obviously companies which are strong in terms of balance sheet would typically take advantage of these low cycles to either put up capacity or to maybe acquire some companies. How are you thinking about it, given that your medium to long-term kind of expectation is there in terms of improvement?
You know, the way to situation looks to us. One, whatever is the demand happening in the worldwide, it is less. So this is not really giving us big concern because everyone is in the same boat. It's a matter of time. Interest rates will come down. Things will be all right. And whosoever is an efficient player, they will survive this period. Some of the weaker players may go out of the business, and all good companies will start making good money once the situation is normalized. It may take 3 months more, it may take 6 months, 9 months, 12 months. So that's really not a big concern to us as of now, and we are very confident. As the things will start improving, we will also start working well. So there's no issue to that extent. The only concern we as an organization or as an industry have as of now, we have an import duty on raw materials in India. And in case the Indian raw material continues to be on a higher side because of that duty component, then whether the India will be in a position to really be viable on the spinning side. So because that's nothing to do with the world markets or the demand. That's something to do with the India as such, because we are not the only supplier. India is not the only supplier. So suppose our cotton is expensive, will the Pakistanis, Vietnamese or Indonesians, will they not get the chance to create capacities and sell in the export market if our raw material is expensive? And that's one larger concern where we have to look at as a country, how are we competitive, which should be in comparison to the world markets. So that's the second point we have. But having said that, I still find there will be lots of opportunities for the Indian spinners also. So to that extent, now there are two choices available. One, that we keep expanding the capacities, but suppose tomorrow, whatever is I've mentioned, if that doesn't get resolved, so to that extent, I think the spinning margins will always be concerned or a question mark. So the second part is that why not to create some infrastructure or some capability, some debottlenecking where once these kind of a brand business comes in, you are in a position to cater to that, and maybe you reduce the basic product. I think Vardhaman's strategy more is on the modernization or a debottlenecking side as of now, and we are trying to look at in case we can create those capabilities going forward. Probably whenever the opportunity comes in, we should take advantage of that rather than only expanding the capacity. And all our thought processes as of now are going into that. Just to give you an idea, normally we have a capacity, we have a normal modernization in the spinning business about 100 crore, 140 crores a year. But I'm sure this year, going by the situation or the opportunities we are looking at, we're creating capabilities where we have increased or enhanced our modernization plans. And we might look at instead of 150, we might spend 300 crores on the modernization for this year, maybe a similar amount in the next year, so that we create those capabilities that if those opportunities come in, we encash that with a better margin rather than just creating a top-line numbers only.
Okay, understood. And so last one is on CapEx this year. What are the plans? You mentioned 300 crores for modernization, but is there any other CapEx other than that?
So there are some small projects within spinning which is being considered under evaluation, and I hope once if we are in a position to start implementing that, it could be maybe another 100, 150 or 200 crores, but not really any very, very, very big project as of now. So I feel the physical capex for the spinning may be about 300, 350 crores physical, because even if we start taking some project this year, the expenditure won't be there. And maybe another about 100 odd crores for the fabric business. So the totality could be 350, 400 crores.
Okay, and nothing on renewable power in terms of capex?
So, Rajiv, can you give some idea on the renewable side?
Actually, in case of Vardhaman Textiles, we already entered into an agreement with Renew Power company for supply of solar and wind power to our MP unit, which is Anand spinning mill. So partial power will be supplied through this project, and implementation of the same is expected in the next 15 to 18 months. So that is the already tied up project, and otherwise also we are exploring the opportunities to expand the solar and wind power waste, where we can see that our renewable power composition may be improved within the overall energy consumption in the company.
How much capex for that?
The first part which Rajiv mentioned, it is through the SPV where our contribution will be very less. So in terms of our capex, it may not be directly into our company, but it will be by a SPV, so it may not be appearing directly into our books because we will be holding only 26% equity in that company. The other, we are considering some other projects. We are yet to take a final view whether that happens by way of a SPV or it is a direct investment in the company. So all those options are there, but definitely we are evaluating it seriously to create a bigger capacity, which I'm sure next maybe 2-3 months we should be in a position to take a final view on that.
Okay. Great, sir. Thank you and all the best.
Thank you. Next question comes from the line of Avnish Chandra with Smith. Please go ahead.
Thank you very much for this opportunity. Sir, in the initial remark, you have touched upon all the points very briefly, but still continuing the discussion on the margin. Sir, if I look at your 10 years performance or even 5-year performance, and even I exclude 24% wala margin and few 20% margin, still even bad, ugly, whatever may be the situation, we used to hit 13-14% all the time. So last 4-quarter performance was way below. So is there any structural change you are seeing, and that is the reason we are not even able to make 12-13%, because that was the norm even in the bad years of 10 years. So looking at such a long data and hitting 9% below margin still doesn't add. So any structural change you are really seeing in the market for the margin perspective?
No. There is no structural change at all. It is only since the demand is not there because of very high inflation in USA and Europe, where the priorities have changed as of now. Gas prices are very, very high. Those are the issues and concerns. Interest rates, who has seen the interest rates of 5.5% in USA in last 20 years? Nobody has seen that. So I think those are the issues and concerns where these concerns have started coming in. And once, I think now most of the time, we are hearing or we feel there could be maybe a the interest rate increase may not happen in USA, or maybe there could be 1 or 2 tranches which can happen. And after that, once the inflation is under control, their interest rates start coming down, gas prices should normalize. So by that time, I think the things will change. But as of now, since the problems are much bigger over there or are very different over there, which are the biggest consumption centers in the world. So that is where these issues are coming in. The overall demand of textile products is less. And if the demand is less, to that extent, I don't think anyone will be in a position to make money, because it's not only Vardhaman or India. Most of part of the textile industry in the entire world is passing through the same time.
Okay, understood. So there is no issue in the structure, it is just a current situation. Okay.
Yeah.
And sir, one bookkeeping thing, how much cotton inventory currently we are having?
So the India cotton season ends on 30th of September, where anyone or everyone in the system will have a bare minimum quantity. So maybe because the season ends and the new season starts in. So we also are in a similar situation where it is the change of the season, and I think physical inventory may not be more than 30-40 days in the factory as of now. Of course, we started buying as the new arrivals have started coming in, and maybe next 2-3 months we should be in a position to build it up.
Okay. And sir, one last thing, continuing the discussion of modernization you have talked about. So we are not going to focus on higher tonnage, rather than your focus will be on product mix. Because when you say modernization, it is not increasing the output but change the product profile. Is that correct?
No. So there are a couple of things in the modernization which we look at. One is the product profile change. 2, sometimes because of the higher speeds, some of the machinery will be in a position to give you a better output also. Many a times there is one bottleneck machine because of which you can't increase the overall production. So if you are in a position to improve upon that, the overall production can improve. And maybe there are a couple of modernizations which are directly linked with the payback in terms of the improvement or a consumption improvement on the electricity or air, etc., compressed air, etc. So there are maybe some of the modernization happens because you require to be in terms of safety, etc. So there are different parameters to look at that, and when I say the total modernization, all these are a part of that, and depending upon the opportunity, we will keep taking those things.
Okay, but as such, there is no plan to increase the capacity or whatever 12 lakh per annum capacity.
No, not in a bigger way in any case as of now.
Okay. Okay, sir. Thank you very much. All the best.
Thank you. Next question comes from the line of Prerna Junjunwala with Elara Capital. Please go ahead.
Thank you for the opportunity. I just wanted to understand, you were holding lesser quantity of cotton at the end of last year, and there was a lot of volatility of cotton prices in the last 3 to 4 months. Given your balance sheet, you would have procured cotton at lower prices. Then what restricts, a little better margin than last quarter? Just wanted to understand from that perspective.
No, the cotton prices have started coming down only in last 2 to 3 weeks only, because before that the cotton prices were in the range of 62, 63, 64,000 rupees a candy only. It's only last 2-3 weeks where the prices have come down to 57, 58,000 rupees a candy. So I think, and again we have just started buying because we are still the arrival is only 100,000 bales a day. The overall consumption in India is also about 85,000 bales. So the best possibility for the mills to add is only about 15 to 18,000 bales if everyone is buying on a one-day basis. Maybe some of the spinners may not be buying, so some other mills can actually build up some more inventory. So it's only the starting of the season. The prices have come down only now. And also, whatever the prices drop happen in India, I think the yarn prices for the last 6 months are continuously going down only. So even if the cotton prices comes down in India because the New York future has come down, so the overall yarn prices are also reducing. So the possibility of margin improvement even with the lower cotton prices is not looking like it as of now.
Okay. So with increase in fabric capacity utilization, we should see some better margins?
For fabric, yes, but the overall, since the spinning is still a significant part of the company, so unless the spinning improves, the overall margins may not improve significantly.
Okay. So, sir, what should be the sustainable margins in the spinning industry given that import duty does not go away on cotton for a longer time? Then do we continue to report such weak margins, because that is one of the main hindrances for a better operational performance?
No, there are 3 factors to this. One is the import duty. That is only one of the factors. So if you look at the today's cotton prices, international and today Indian prices, there's no disadvantage to the Indian spinner as of now, even if there is an import duty. So that's not the impacting it as of now. The impact today is more coming from the lesser demand. Now, unless the demand improves, and that demand will definitely improve the New York future also, and in case New York future is at 85-90 cents, then the Indian concerns would not be there of our MSP. So I think all 3 things are related. Purely the import duty on cotton today is not hurting us. It is demand which is hurting us the most as of now. And whenever that improves, I am sure the demand improves, the cotton prices internationally will also improve. And once that happens, the Indian prices are also aligned to that. So to that extent, I think there's no disadvantage. So it's very difficult to say it's only because of the import duty, the prices of cotton in India is higher and the numbers are not sustainable. No. Today, the biggest concern is coming from the demand side. Okay.
And if I want to understand a longer term picture for Vardhaman from 3 years perspective, how should we look at this company from growth or margin perspective from a 3 to 5 year perspective? I am trying to understand.
We have lots of plans which we have prepared, but at the same time, we are a very, very conservative industry company, and we are always looking at that whatever we have, we should be in a position to sustain it, pass through all kind of difficult times successfully. Going by this kind of a situation, now let's look at another situation. The MSP in India is 7,020 rupees as of now, which is equivalent to 57,000 rupees. A candy, which is equivalent to 86-87 cents of cotton. Tomorrow, New York future goes down to 70 cents. Our cotton will not come down below that. Will not be in a position to import because of import duty. So which means we'll be very, very on a higher side. So our concerns and questions are only that unless there is a clarity, because if their import duty is not there, then there's no issue. We'll also import at a lower prices. But we can't import because there's a duty. We can't buy in India at a lower prices because there is a MSP. So whether in these conditions one should expand in a big way. So better to wait for a year or two till the time we get a clarity on the thought process, what the thought process in terms of the economics of this industry. And once we are clear that whatever plans we have and implementing that will not take us much of a time. But it's more of a clarity required on, as a country, our competitiveness. That's a debate we are having. So to that extent, we don't intend to really spend a huge amount and creating a trouble for the company at a later stage.
Understood, sir. So what will be the plans for expansion in fabric business?
Or else we get a very nice plant at a dirt cheap price, so where you are in a position to take this. So there's nothing as of now on cost, but if something like that comes in, we'll take a call on that.
Understood, sir. So what are the plans in fabric business, given that we have crossed 80% utilization and the demand in woven fabrics is improving now?
So fabric is the first time where we have started utilizing at least not even 80%, we are crossing even 90%, 95% also, I'll say. It's the first time since this line was implemented just before COVID, we are in a position to utilize our 100% or most of the capacity. Want to sustain it for a couple of months, and once we are in a position to see the sustainability, definitely we'll look at expanding that business or maybe adding something over there, whether on a man-made side or something like this. So I'm sure rather than the spinning, I think it may look at an opportunity where something could be coming in where maybe we'll wait for the next couple of months so that whether this demand is sustainable or not. And we'll take a fresh view after that.
Okay. Understood, sir. Thank you, sir, and all the best.
Thank you. Next question comes from the line of Rahul Soni with ICICI Bank Limited. Please go ahead.
Hello. Yeah, thanks for giving me the opportunity. Sir, I would request you to throw some light on the overall utilization level for the spinning industry, and also if you can provide some insight on the utilization level at the SME level.
So our estimate, and there is no industry-related data which is available, but we keep doing surveys, we keep talking to our vendors, we keep talking to the various customers or the different stakeholders in the industry. Our feeling is on the spinning side, it is almost 90% spinning utilization is as of now there. But having said that, whosoever is a vulnerable player, especially the SME, the utilizations have started coming down. There are lots of companies which have started stopping on a Sunday, or maybe the partial capacity 10, 15, 20% has been reduced. So most of the good managed companies, large one, they are running 100% utilization. And the SMEs or the more vulnerable or financially weak players, the utilization will be surely much lower. So we estimate as of now the spinning utilization could be in the range of maybe about 85 to 90% in India.
On overall basis?
Yeah.
Okay. So second question on this, your modernization. So will there be any impact on the margins post the modernization of the plant?
Immediately, no. It is only you are creating the capabilities. So if the differentiated or a better product comes in. So as I mentioned, again, there are some modernization which is happening only because of the quality front. So the new machines are coming with a better technology. And if you want to continue your preference from the customer side, you might have to change those things even if the profitability is not there. So our modernization includes the debottlenecking. The modernization includes where you have a direct payback. The modernization includes where you have a safety issue. The modernization also includes where you have a preference from the customer. So all these 4-5 factors are considered where we are spending money, so that even after 56, 57 years old company, customers should not have a disadvantage of working with someone whose technology is not to the mark.
So one last question. So what are the factors which affect the spread between the cotton and cotton yarn, apart from this up down in the cotton prices?
No, only demand and supply. If the yarn demand is good, the margin, the spread will improve, or vice versa. Only and only demand supply, nothing more than that.
So is there any range which is considered healthy for the spinning industry?
So the industry has always been talking of healthy margins at $1 spread, which as of now most of the industry is working with 50 cents to 70 cents spread.
Okay. Okay, sir. Thank you.
Yeah.
Thank you. A reminder to all the participants, please restrict yourself to 2 questions. Next question comes from the line of Amit Ketan with Laburnum Capital. Please go ahead.
Hi, good evening, and thank you for the opportunity. So if you could just share what was the realized cotton yarn spread for us for the last quarter, and where is it currently?
So I can give you the market numbers. It will be won't be more than 50 to 60 cents, and the current spread is also like the same.
Got it. And you mentioned, is my understanding correct that just getting back to the path of normalized spreads of 90 to 100 cents, that's just a matter of demand and nothing else?
Correct.
Okay. And you've talked about industry utilization in India at 85 to 90%. Would that be a similar utilization for global yarn industry?
Almost same.
Okay, all right. And lastly, is my understanding correct that the import duty is an issue for the industry only when the global cotton prices are below the MSP?
Not really. That is surely an issue when it happens. But let's look at the last year. The last year cotton prices international was not lower than the India. But the entire chain came to know the import cannot be done, and the overall crop was brought in such a way. Generally, if you look at the Indian cotton season, the crop will start somewhere in October, and by March, the 90% crop will be over. But since the entire chain understood that the import cannot happen, so they calibrated the entire arrival of cotton, and the old cotton kept coming till September against the February or March. The farmer was bringing in only what is required on a daily basis. So they never allowed the mills to increase the stock because and the prices were kept remaining very, very high. So it's not only when the New York future comes down, but under normal circumstances, once you know the crop is less, or you know that we can calibrate the cotton arrival so that mills couldn't make the stock. So that issue is also there. Tomorrow, if a situation comes in where our crop comes down to, let's say, 295 lakh bales and our consumption is 310. So irrespective of where the New York future is, we'll not be in a position to run the mills. So how will we work on this?
Thank you. Mr. Ketan, please join the queue for follow-up questions. A reminder to all the participants, please restrict yourself to 1 question. Next question comes from the line of Sanat Kumar with Value Research. Please go ahead.
Can you hear me?
Yeah.
Okay. So thanks for providing this opportunity. Most of my questions have already been answered, but I have a question more related on the strategical level. So if you're looking at, the cotton prices and the demand supply scenarios and the impact on the margins, what strategically the company is trying to do so that they can either safeguard itself from this volatile situation, or that coming up with new product mix, or more of the market development side.
Yeah. So it's not only that what we are thinking that what should we do in terms of product mix is basically in demand and supply. And I feel as the cotton prices keeps going up in the markets, the more and more brands I have mentioned earlier also will keep moving to the blended yarns. And we are also looking at very carefully wherever we are finding that this is a segment where the demand is increasing or improving. We are creating those infrastructure, those capabilities, and we are just moving our product mix to match so that we are not lagging behind anywhere. So all this modernization, debottlenecking I'm sharing is also part of that, where we have to keep investing so that whatever opportunity looks like in the product mix changes, we are in a position to gear up faster.
Thank you. Mr. Kumar, we request that you return to the question queue for follow-up questions. Next question comes from the line of Anik Mitra with Finata. Please go ahead.
Am I audible, sir?
Yeah.
Good evening, sir. My question is, as you mentioned, that CAI has given a guideline regarding lower cotton yield. So in case cotton yield remains on the lower side, and considering import restrictions, cotton prices may go up. And in case Indian cotton prices further goes up and international cotton prices remained at the same level. So again, the spread between Indian cotton and international cotton may further expand. So what is your outlook on this regard?
As I mentioned, we still feel, because the different industries have done the different surveys, and we still feel the crop is not less than 320 lakh bales as of now, which should be sufficient to take care of us. I do not know the basis how they have come to this figure of 295 lakh bales. So the government of India also does, the Ministry of Agriculture does their own survey, and their report is likely to come maybe next 2 weeks or so. So I think that's a much more authentic figures where they take the ground realities and what's happening on the crop side. Let's wait for that and look at that what happens. But in any case, if the crop is less and the import restrictions are not reduced, I mean, the similar situation had happened 2 years also back. And at that stage, our crop was less. At that stage, the government of India allowed the duty-free import also for a period of 3 months or so. So maybe the government has to take a view once they know that the crop size is less, consumption is higher, imports can't happen, they will have to take a view and they may allow the import, which they did 2 years back. So we'll have to only request the government that if the crop is less, consumptions are higher. So this is a situation they'll have to decide what they want to do with the industry.
Thank you. Mr. Mitra, we request that you return to the question queue for follow-up questions. Next question comes from the line of Amit Kumar from Determined Investment. Please go ahead.
Yeah, thank you. So just one question. You talked quite a bit, in terms of weak demand. So one of the opportunity sets that opened up, for us is, the UAE and Australia, FTAs essentially. So any thoughts on that? I mean, is there possibility of, these markets, becoming a bigger sort of consumer for Indian yarn and, fabrics, and specifically, with respect to the company as well, any sort of agreements that you're sort of seeing on this side, on the back of these FTAs, really?
So all these FTAs which are being done, definitely it's a big support to the country. But having said that, most of these agreements, whether let's say Australia, they'll be buying only the garments. So to that extent, the India has to gear up for the garmenting, for the home textile, and those products, because these guys are not going to be garmenting in Australia. So for all the spinners in India, it will be an indirect demand where if the increase happens on the garmenting side on home textile, we are in a position to supply yarn to the Indian counterparts who will be in turn exporting to these countries. But all these things, advantages will come only in the medium term. Because once these FTAs happen, all these companies have to work with their own supply chain arrangement with India, They'll have to look at the quality products. They'll have to look at the entire trust system which they want to create or the ecosystem they want to create. So medium term, definitely all these FTAs are a big advantage. But I think if you're talking about immediate something will happen, no, because these guys will keep buying from where they're buying. They'll start looking at one by one product where they'll come to India, they'll look at the quality, they'll look at the logistics, they'll look at the supply chain arrangement, and slowly, if things goes well, they'll keep building those capacities in India. Or suddenly something will happen in 6 months to 1 year time? No, I don't think that's likely to happen, because even if there's an opportunity, the customer won't change immediately unless he has the comfort of buying from India.
Thank you. Due to time constraints, we have reached the end of question and answer session. I would now like to hand the conference over to Neeraj Jain for closing comments.
So I think, as I mentioned, of course, there are issues, challenges which we have explained, and I'm sure the entire industry is passing through the same. Having said that, whatever internally are the opportunities in terms of improving efficiencies, reducing cost, finding opportunities, finding new customers, I think the organization is really, really working hard. And for us, the definite one advantage is that our weaving division has started doing well, which will give us some support in this kind of a time to pass through this difficult time. Of course, spinning being the largest business, we have to look at how it improves, and maybe it's a matter of time once things start improving. In the meantime, as I mentioned earlier also, that whatever are the opportunities or possible opportunities in terms of debottlenecking or product mix changes or the machinery improvements or the customer delight, we are working on that also, so that even if by the time the good period comes in, we should be in a position to take advantage of that, rather than at that stage also we are not in position to supply to them. So thank you very much for to all of you for showing patience to us in this kind of a difficult time. But in terms of our financials, management, thought process, strategy, and are working on the different strategies, the entire management is working really, really day in, day out to see how we pass through this difficult time. And I'm sure the good time will also be available very soon. So thanks for being a part of the company, for part of our calls. And anyone has got anything which is left because of the time constraint today, our investor desk could be contacted, where we can fix a specific call or we can reply through that arrangement. So thank you very much to all of you.
Thank you. On behalf of Batliwala and Karani Securities India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.